Naturally, the steep drop began to slow down upon contact with the 0.618 retracement level, and since the volume on the way down was relatively low, a bullish perspective would be looking for price to maintain contact with the 0.78 portion of the channel to provide better conditions for a retracement back to at least the mid to upper 14 range. And if price cannot keep closing in the 0 to 1 range of the Fibonacci channel by the end of this week, a bearish continuation becomes more likely, which would then direct attention towards the 1.27 portion of the channel and the next retracement level towards the end of the month. Then remember to stay tuned for coverage of more charts and hundreds of tutorials on technical analysis. Now onto the Solana chart, where 210 to 215 is a relatively weak range, but it presents stronger resistance for the duration the spiral runs through it, meaning a bullish continuation could be favored only if price keeps closing firmly above 200 towards the beginning of April. On the other hand, if there are at least 3 closes in a row under 200, a minor bearish retracement would be quite normal, towards the 183 to 172 area, which presents significant support against a drop continuing to the 150s.